NBC2 proudly presents Valley Showcase with your host, Doug Edge.
Good morning, it's January 28th and welcome to this week's edition of Valley Showcase. And a lot of folks are thinking about filing taxes. It's kind of the time of year when everyone's getting their forms back in the mail from their employers. And Andy Stadler is here with us today to kind of talk us through some of the changes and some of the things that people need to know this year when filing taxes. And Andy, I want to start with folks that may have a business or some business at home, maybe a home business watching us today. Tell us about some changes that the government has made for this year.
Well, one of the big changes is the payroll tax. If you have an employee and you have at least $10,000, or you make have wages of $10,000, in the past you could have went down to the local bank and just simply made your payroll tax deposit at the local bank. Well, now you've got to send it in through a program called EFTPS. It's a change. A lot of people are not familiar with that, but that's a requirement starting 1 January that all payroll taxes now have to be paid through this federal payroll tax program.
Okay, that's an electronic version now of making that process work.
That is.
Tell us about, I heard a lot of talk about this payroll tax holiday. What's that all about?
Every American gets to enjoy this. What it is 2% of the Social Security tax. They've reduced the Social Security tax by 2%. So you got a 2% raise on your payroll, on your paycheck.
Okay.
You should have noticed the last couple paychecks are a little higher than normal. It's not a mistake. It is an actual increase or decrease in Social Security tax, increase in your paycheck.
Now, how long is this holiday going to be around?
Through December 31st. Okay. Only for this 1 year, but you get to enjoy it the whole year.
Now, is that part of the whole plan to help stimulate the economy a little bit?
That is part of the overall national plan to stimulate the economy, keep people a little more money in their pocket to help get things going.
Okay. Now, on the personal side, folks, you know, like I said earlier in the show, they're getting their forms in the mail. They're thinking about filing their taxes. Yes. What are some things that are new and different this year that they need to be aware of?
Well, one of the things that is new is the delay. The Congress didn't pass the tax bill until the very end of the year, like December the 17th. And because of that, that has delayed if someone is itemizing your tax returns, taking the mortgage interest and property taxes, if you're an educator where you're taking the education deduction, if you're a college student, you're going to take the tuition reduction. Those items cannot be sent to the IRS or cannot be electronically filed until the 14th of February. So after that date, you can do that. But the IRS is reprogramming their computers because Congress waited so late in the year to pass the new tax bill.
So therefore, everyone else is being delayed as well.
That's correct.
Okay. Let's talk about some of the basic things. The filing status. I think a lot of folks are confused every year. How do I file? What's my filing status? Walk us through some of those.
Well, the first one is the Internal Revenue Service looks at December the 31st. Whatever your marital status is on that day, that is what your filing status is for the entire year. So if you're single that particular day, then you're single the whole year. It didn't even matter if you were married for half the year. You're single the whole year. So you'd file either a single return, or if you have a child living at home with you, you're taken care of, possibly head of household. If you're married on that day, then you're going to either do a married filing a joint return or married filing separate. If you happen to be a widower, then you're going to be filing as a qualified widower. So those are the 5 different filing statuses that you would qualify for, but it depends on December 31st. That one day sets the entire course.
Let's talk too a little bit about dependents and exemptions. What are some things, some basics there?
Yeah, a dependent is normally someone who is your child living in your home with you, or perhaps off to college, but usually under the age of 18 if they're in school, elementary school or high school. Under the age of 24 if they're in college, you get to claim them. Now there is what we call a dependence test where we will review to make sure that is this a blood relative? Did you financially support them more than anyone else did? So you definitely want to get with your accountant to make sure there's someone you can claim. They don't have to be your relative, but usually that's the first step we look at.
Okay. Now, we're going to ask you to stay around during the show today because I want to come back at the end of the show. I know there's a lot of concerns and different changes again out there with the way the rapid refunds are working now and some of the different laws and things that have gone on through the government. So I want you to stick around. I also want to ask you about those computer programs as well that people might be considering buying to do their taxes. So Andy Stadler will be back with us with Stadler Tax Company. Before the show is over, we'll answer those questions with him and a few other things as well as we get ready to file taxes for 2011. And his contact information is on the screen for you right now. If you do have questions, you can call them at 812-478-2800. Another